You're watching News Now and I'm Nivedna Prabhu. Let's begin with the top development of this hour as far as the ITC earnings number is concerned. In fact, the net profit reported at rupees 4,912.35 crore versus rupees 4,917.45 crore. This is down 0.1% year on year. Revenue, in fact, standing at 19,750 crore versus 16,374 crore, and EBITDA at rupees 6,261 crore versus rupees 6,087 crore. That's up 2.9% in fact year on year. EBITDA margin lies at 31.7% versus 37.2%. That's down. You're looking at minus 547.3 BPS. This is year over year. I'm given to understand Naveen Kulkarni, CIO Axis Securities PMS, is joining us on the show this evening to look at how he, of course, essentially is viewing these numbers. Mr. Kulkarni, thank you very much for taking the time out joining us here this evening on ET Now. To begin with, what do you make of these numbers, Naveen? Naveen, very good evening. Thank you for taking the time out. What do you make of these numbers?
Yeah, so prima facie, if I were to look at the segments, cigarettes, I think has grown by around, revenues have grown by around 6-7%, so that looks okay. FMCG segment, I think, was also done relatively okay. The cigarette EBIT numbers, I need to look at it a little more closely. I agree, of course, this was relatively important quarter. So that has seen growth. So more or less broadly, the takeaway that I see is that most of the segments have grown. So that's the positive thing I'm seeing. But the growth is still in single digits across segments. So that's something which is, I would say, not very inspiring, but okay. So I would say that these numbers are largely in line with expectations. But from a key operating metrics perspective, I would see that there is broad-based growth which is coming through.
You know, Naveen, as you point that out as well, and we're looking at these numbers, what's essentially, your purview as far as outlook is also concerned?
Yeah, the outlook for FMCG sector is broadly the same, right? Or even for ITC. We are seeing some green shoots happening, sequential improvement happening. More importantly, second half of the year, we should see pickup. Diwali should be good. I think we are moving towards that. That is broadly the takeaway that I'm getting. We need to see how Q2 behaves. But I would say that Q1 numbers have been largely in line. Some bit of encouragement considering the segments have done well, right? So that's the important factor. It's not that one segment has done badly. More or less all the segments have done relatively better.
All right. And as you're pointing out is also, Naveen, looking at these numbers essentially with the fact that margin has also seen a slight dip. Is that something that we were penciling in?
Yeah, so margins were expected to be not that great, right? So when you have single-digit growth, and of course, raw materials tend to fluctuate, margins will be under pressure. When, let's say, growth accelerates to, let's say, higher single digits or double digits, that's when we start seeing operating leverage and margins improvement happening. As of now, it's more led with, let's say, gross margins, some bit of cost savings here and there, how margins tend to get managed. But broadly speaking, when growth is in single digits, we don't necessarily see serious margin improvement, right? So that will always remain a challenge. But important factor, as I said, is segmental growth is more broad-based. That is something which is encouraging.
All right, Naveen, appreciate you joining us this evening and putting that into perspective as to how essentially you're looking at these numbers. We'll continue to track that on ET Now, but for the moment, we leave it at that because we're shifting our focus to more that we're